Welcome to this talk on the NHS Pension Scheme, with an emphasis on the key points of the scheme for an associate dentist. I'm Tom Slevin and I am a Chartered Accountant at Morris & Co. I act for a large number of associate dentists and dental practices and have a keen interest in the NHS Pension Scheme. I spend a lot of my working week advising clients on the NHS Pension Scheme and the various issues that come up across that. In the talk today, we'll look at how the NHS Pension Scheme actually works, what the contribution rates are and how these apply to an associate dentist. This will lead on to net pensionable earnings, or NPE, and we'll then have a quick look at the annual pension statements you may be asked to send to your accountant or financial advisor. Before we look at the intricacies of the NHS Pension Scheme for associate dentists, we first need to understand the key features and benefits of the NHS Pension Scheme. We'll be focusing today on the 2015 NHS Pension Scheme. The NHS Pension Scheme is a defined benefit scheme. You may have in the past heard of these as being called final salary pensions. Defined benefit schemes are becoming less common due to the overall cost to the employer, but are still common in the public sector. The main features of a defined benefit scheme is that there is no investment risk, so your pension doesn't increase or decrease depending on the performance of stock, shares or bonds. And your final pension in the 2015 scheme will depend on your career average revalued earnings and not the amount you or the NHS pay into your scheme. So you may have heard of career average revalued earnings, or CARE for short, before, but you may not understand what this actually means. So a CARE scheme pays out a pension based on your career pensionable earnings. This includes your foundation dentist year salary, plus your net pensionable earnings as an associate dentist, all through your career until retirement. Each year your earnings are sent to NHS Pension, and these are updated on your record, which can be found on the total reward statement, which we'll talk about later. Each year a revaluation occurs on all of your past earnings. So the revaluation is calculated as Treasury order plus 1.5%, and Treasury orders linked to the Consumer Price Index. So your earnings are subject to revaluation above inflation. At retirement, your career revalued pensionable earnings are totalled and converted into an annual pension that you will receive monthly. Your annual pension is then uplifted each year on retirement. At the moment, the accrual or conversion rate in the 2015 scheme is 1/54th of earnings. You can also opt to convert some of your annual pension on retirement into a tax-free lump sum with corresponding reduction in the annual pension. As I said previously, though, the amount you pay in does not determine your pension on retirement, and it's the earnings that are the important figure, and we'll cover the importance of this for an associate dentist in a moment. So the 2015 pension scheme in the NHS, it is voluntary and you can opt out at any time. Do be aware, however, that if you do opt out in or out of the scheme partway through a financial year, the scheme annualisation rules apply. So for instance, if you were not a member of the pension scheme for 8 months of the financial year and opted back in on the 1st of December, you'd have 4 months worth of NHS pensionable earnings for that financial year. So these earning figures may fall within the second contribution tier rate, where earnings are between £15,342 and £21,478, and so you may expect to pay pension at a rate of 5.6%. However, the contribution rate will be determined by the annualised earnings. So in this example, although you've earned between £15,342 and £21,478 for pension purposes in that tax year, because of the annualisation rules, the pension rate could be as high as 12.5% and not 5.6%. So retirement age in the 2015 scheme is set at the later of state retirement age, or 65 years old. As state retirement age is already higher than this and it's unlikely to come down in the future, you can think of the normal retirement age in the 2015 scheme as being state retirement age. However, you can access your pension benefits before this age, but the benefits will be reduced as you'll be accessing them for a longer period of time. So the table on this slide, this shows the percentage of your accrued benefits that you'll receive depending on the number of years before you retire before scheme pension age. As you can see, if you wanted to retire, say 1 year before pension age, then you receive 94.6% of accrued benefits, whereas 5 years before scheme pension age, you receive 76.7% of the accrued benefits. So these are the current contribution rates that are payable in the NHS Pension Scheme. These are due to be amended after the 31st of March 2022. Whichever your pensionable earnings figure tier lies in, you will pay that percentage of your earnings into the pension scheme. So someone with pensionable earnings of £20,000 will pay NHS pension at 5.6% of all of the £20,000, whereas someone earning £40,000 of NHS earnings will pay NHS pension at 9.3% on all of the £40,000 NHS earnings. There is an employer's contribution rate of 20.6%. You may see this as 20.68% in other literature, but the 0.08% is a levy to cover the administration of the scheme. We will cover in a moment why you may also see a different percentage than 20.6% on some of the NHS pension statements you may receive. So, as I've said previously, the amount you or the employer pay into the scheme does not actually affect your accrued pension benefits. The only important figure is your pensionable earnings and the number of years that you accrue in the scheme. In this scenario, we'll look at two associate dentists, one who has NHS earnings of £48,000 and another who has NHS earnings of £47,500. So they've earned very similar amounts in the year from the NHS. There's only a £500 difference. However, the higher earner is within Tier 5, so pays pension at 12.5% on all of the £48,000, whereas the other is within Tier 4 and so pays pension at 9.3% on £47,500 of his earnings. As you can see, there is then over £1,500 difference in what each of the dentists pays into their scheme. So the first dentist pays £6,000, the second dentist with £500 less NHS income in that year pays £4,417.50, so over £1,500 difference in what they pay, despite there only being a £500 difference in income. When this is converted into their pension accrual, the first dentist, they will accrue annual pension of £888.89 before annual revaluation, whereas the second dentist accrues a pension of £879.63 per year before annual revaluation. So for that extra £1,500, there's less than £10 a year difference in pension accrued before annual revaluation. So as you can see, there can be a stark difference in the amount that people pay, despite them having very, very similar NHS earnings. This is why when it comes to submitting your annual net pensionable earnings to the NHS as part of the annual reconciliation report process, it may be prudent to involve your accountant in that process. It may save you quite a lot of money. So we talked about net pensionable earnings, and you've probably heard of this or its abbreviation NPE. But we can think of NPE being kind of two separate figures for the purposes of pension administration. There's one that's an estimate that is used by the NHS to deduct your pension monthly, and the other is the finalised NPE that is submitted as part of the annual reconciliation report process. So first we'll just take a look at the estimated NPE. So when you first start working at a practice, the practice will need to estimate your NHS pensionable earnings for that financial year, and they should use your UDA target for the rest of the year, multiplied by the UDA rate, and that should give you an estimate of your NPE. This estimate is submitted to the local area team using the contract allocation form and updated on Compass. You then start to pay monthly into the NHS pension using this estimate. However, if the estimate is not very accurate, you may end up either overpaying or underpaying into the pension scheme in that year. So at the start of the next year, this estimated pensionable earnings is typically carried forward into that year, and so any over or under estimate of your net pensionable earnings will be carried forward for another year. It is important that throughout the year, you therefore look at your net pensionable earnings estimate on Compass to check that it is actually accurate, especially where you start to do more or less NHS work per month. than you were originally doing at the start of that financial year. And it is easy to check the estimated net pensionable earnings on Compass. So you can look at this on the pension section, but you can also find the monthly estimated NPE on your payment schedule. So let's look at this example monthly superannuation notification, which is found on the payment section of Compass. So in this case, the associate has a monthly payment figure of £5,500. So this is the monthly estimated pensionable earnings for this associate. If we annualise this, this is annual estimated pensionable earnings of £66,000. We then see pension being deducted at 9.3%, so £511.50 has been deducted for pension in that month. So just from one glance, we can see that there will be a big underpayment of pension for this associate over the year. But why is that the case? So £66,000 of estimated pensionable earnings should have pension deducted at 12.5%, not 9.3%, because it's in the 12.5% contribution tier rate. The end difference at the end of the year is an underpayment of £2,112 for this associate, and it's one fairly common issue we find, especially with new associates, where the pension rate may be incorrect. The local area team can be contacted to try and rectify this. The other area that we may see is that the £5,500 monthly payment may not actually accurately reflect the average monthly earnings of the associate for NHS work. So if they're actually earning on average £3,000 per month, then this associate at the end of the year would have overpaid on their pension by £2,790. So if there's no overpayment or an underpayment, unless the estimated monthly pensionable earnings are changed during the year, any underpayment or overpayment won't be requested until the ARR is completed for that year, which could be months down the line. One other thing to note on your monthly superannuation notification is the employer's contribution of 14.38%. So the 0.98% again, that's the scheme levy. So it's an employer's contribution of 14.3%. As we saw previously, the employer's contribution rate is now actually 20.6%. The reason there's a difference of 6.3% is that 6.3% of the employer contribution is centrally funded, and so it's not shown on the pay statement. 20.6% is put into your pension scheme, but as we've said previously, it doesn't actually matter how much is put in by you or the employer. It's just the pensionable earnings that affect your pension accrual. So as discussed, it is important to check the estimated NPE throughout the year and request the practice to make changes if your estimate isn't particularly accurate. We do regularly see associates, especially in the first year after their foundation dentist post, having large underpayments due following submission of the ARR, and this can be several £1,000s, which they are then required to pay back in practice in one payment. If you're not sure, ask your accountant to have a look for you. So there is a need to be able to calculate your NPE and your estimated NPE. So if your estimate of your NPE, as I said before, just multiply your annual UDA target for that year by your UDA rate, and that should give you a relatively good, accurate figure for your NPE for that year, unless you start significantly under or overperform on your target. To calculate your actual NPE after the end of the financial year, you need to use the following calculation. So you'll need to calculate the amount of income received for NHS work, and this will typically be the amounts received for the UDAs performed in the year. So look across your pay schedules for that financial year for the practice. Total up all the NHS income across the pay schedules, and that's your first year NHS income before costs. Don't include any other NHS income such as parental pay, trainer's grant or sickness pay. These aren't included in the NPE calculation, but they are automatically calculated on Compass towards your annual pensionable earnings. You then need to deduct your NHS costs, so these may include NHS laboratory costs, NHS therapist charges and NHS levies. Do not deduct the pension contributions, as these aren't a deduction from your net pensionable earnings. Some practices, however, may not do the calculation that we've just gone through. They may do it slightly different. Some practices may not deduct NHS costs and just include the NHS income. If that's the case, then you can go ahead with that calculation. But if you want a lower figure, you can request that that's put in on the ARR for you. Some practice, however, still calculate associate's MPE using 43.9% of the total gross paid to the associate for UDAs performed, and this will almost always lead to the associate's MPE being lower than the MPE calculated using the correct calculation, and we would recommend that you do use the correct calculation. We do have a spreadsheet that can be used by associates to calculate the MPE for the year by entering your pay schedules on the template. So please do contact us if you'd like to receive this. So the annual reconciliation report. So this is the report submitted on Compass by the contract holder, stating all of the dentist's MPE of the practice for that financial year. The figure submitted on the ARR is what will determine your pension benefits, and so it is important that you take responsibility for this and check the figure being submitted for you is accurate. The practice and associate should both agree to the MPE figure on Compass, but disagreements can occur, typically with how the different calculations have been talked about previously. Your accountant should be able to provide the calculation of your MPE to you, and you can then show that to the principal on how you've arrived at your MPE figure to back that up. So finally, we'll just talk about a few of the NHS pension statements that you may be asked to send to you by your accountant or financial advisor. The first is the SD86C form. So this can be found on the pension section of Compass, and this details your net pensionable earnings and any other superannuable income for the year, as well as the total pension contributions paid in that financial year. This can only be found on Compass once the ARR has been submitted and processed by the NHS. The second statement you may be asked for is a total reward statement. So this is found on the total reward statement website. This shows an estimate of your accrued pension benefits to date, the scheme membership length, career earnings, and a lot more information that your financial advisor may request if you're looking at retirement planning, for example. The last statement is the pension savings statement, which will be required by your accountant. This can't be found online and may need to be requested to be sent to you by either calling NHS Pensions or emailing their dedicated email address. So the pension savings statement shows your pension input, which is effectively the growth in your NHS pension fund calculated for tax purposes. If you're a particularly high NHS performer and you have high MPE, you may have a tax charge on the pension input or growth. The tax rules are complex in this area and won't be explained on this talk. However, the statement should be made available by the 6th of October each year, though this is dependent on the ARR being completed and processed by the 6th of July, which didn't happen in 2020 and 2021. If you do request a statement from NHS Pensions, they do say it can take up to 3 months for the statement to be sent to you. Typically, the accountant will want this by the end of January, just in case there is a tax charge that needs to be entered on your tax return. But if you do receive it after that, you can send it to your accountant to look at, and amendments to the tax return can be made. So this is an example of the 2018-19 pension savings statement, which can be found on the NHS Pensions website. As you can see, it lists the last 4 tax years' pension input for you on the 2015 scheme. If you're a member of the 95 or 2008 pension scheme as well, then you should also receive a statement for there, even if you're not currently contributing to that scheme. So there's a few useful links for you here. There's the NHS Pension Scheme Member Hub, which you can use to look at different aspects of the NHS Pension Scheme. There's the Total Reward Statement portal, where you can access that using your Government Verify login. And there's also a relatively brand new guide to the NHS Pension Scheme for NHS dental practitioners, which goes into a lot more detail on different aspects of the pension scheme for dentists. So that's the end of this talk on the NHS Pension Scheme for associate dentists. We'll be publishing a more advanced talk on NHS pensions, which will look at the MacLeod judgment, scheme pays, and a few other topics to do with the NHS pension in the near future. If you do have any questions on this talk, then please do contact me at ts@moco.co.uk. Thanks for listening.